So yes, I 100% missed this breakout on today's session in the upward direction because I was somewhere up in the sky flying home. But we've got to be prepared for the remainder of the week. I just can't sit here and say, oh, I missed the breakout. There's nothing left to do on the week. It's time to get active. It's time to look at these charts and set up what the game plan is for the remainder of the week. So this is my first time sort of looking at these charts. I'm going to bring you through my typical afternoon routine now that I'm back at the main workstation here. So if you enjoyed the video or learned anything new, let me know down below in the comment section or by giving the video a thumbs up. And with that said, let's just jump right into it. So SPY daily time frame chart absolutely broke the micro balance range in the upward direction here. Strong move up and over 413 on today's session, but it is worth noting at least that we are still contained within the overall balance range that's been going on since the early parts of April. So step number one complete in terms of getting out of the micro balance, but step number two is yet to be completed. Obviously, we're just coming in for roughly an equal high. We're not all the way there yet, but we are on our way towards that equal high. 416.75 is the number. On the daily time frame chart, something that we were talking about before this breakout unfolded was the opportunity for a daily lower high or a daily higher low, depending on which way the market wanted to resolve the micro balance right here. And now that we've broken out of this box in the upward direction, I would start to think that it's more likely the market views this as a higher set of lows and less likely to view this as a lower set of highs. Don't get me wrong, from a very nuanced perspective, from here to here, absolutely. If the market absolutely reverses tomorrow, 100% retracement back into the balance, there is technically a lower high, but I would say it's less likely that going forward we would want to be thinking about this kind of head and shoulders pattern. For that head and shoulders to be ideal, picture perfect, it would have been more, respectable for a breakdown underneath the balance range here, these lower wick lows, and remain underneath 413. Once again, as of today's close, we've clearly broken above 413 and closed at the highs of today's range, right? You can see as well, there was a test intraday towards these 410.35 lows. Buyers step up at this known area of support, known area of demand, and a big breakout ensues. As we'll get to in multiple data points down the road, I'm sure a lot of this was due to the quote-unquote resolution or positive remarks about the debt ceiling. We don't want to blame it all on the fundamentals because from a technical point of view, a break of balance always should double that balance range, and lo and behold, it takes us right up towards this equal high on the daily time frame chart. So that is what we've got from this time frame perspective. I would say obviously the buyers are in control, and going forward, the most optimistic thing would be either continuation towards the upper edge of the weekly expected move, the equal high here at 416.75, or on tomorrow's session, another acceptable outcome would be a pullback into 413, but we really don't want to go back underneath 413 at this point going forward. We want to see that act as a higher low, right? A very classic break, retest, and then continuation move in the upward direction. Let's take a look at the hourly time frame chart to see what else we can learn about today's price action. Again, I was not watching this intraday, so this is all kind of like I'm taking this in to figure out a game plan for the remainder of the week here. If we bring out the Fibonacci's, what I'm very interested in seeing, just based on look at that, pretty darn good. I was going to say based on an eyeball test, maybe the 50% retracement is right to 413. It's actually, splitting the difference between the 50% retracement and the 61.8, which would just reinforce the idea that that does want to act as a higher low, right? As we were just discussing on the daily time frame chart, we get a break, retest, higher low, looks good for continuation into those 416.75 equal highs where the market has struggled in the past. Obviously, breaking back down underneath 413 puts us back down in kangaroo land, and I wouldn't have any expectations of the market if we return to that area. I would say that yes, this is a very catastrophic failure from the buyers if we were to remain underneath 413, and a stronger flush should be produced in theory underneath 410.35 if that were to happen. Obviously, that's very theoretical, and thinking one step at a time, I have to imagine that there's going to be at least an attempt, some kind of attempt for a higher low at 413 if we get a pullback in the first place. So that's really a huge area of interest for the remainder of the week if we see any sell-side activity on either the Thursday or Friday session. Let's take a look at the market internals and see what else we can learn about what's going on here. I was watching on Tuesday, and if you were watching Tuesday, obviously the market breadth was horrendous. The market was only being propped up and going sideways in this range here, namely due to Tesla, Google, NVDA, and Amazon. And obviously it was a much broader rally on today's session, but we'll take a look at some of those breadth indications later on. The main reason I'm pointing this out out is because on today's rally attempt, although I wasn't watching intraday, just looking with a little bit of hindsight here, we can see that there was strong inflow into the market from a volume perspective. From an advanced decline line perspective, I would say that the Tuesday session was probably stronger on the sell side, but obviously it just didn't materialize in terms of price actually moving down below. So this does strike me as, certainly significant, but not a net zero if you were to sort of think about these canceling each other out. Tuesday was technically stronger on the downside. What is fairly more, I should say, encouraging, or what is more encouraging, would be the tick down below. If you look at the cumulative build on the Tuesday session, I mean, don't get me wrong, it wasn't great. It certainly got nasty towards the close there. If you were watching towards the close, that's really where the bulk of the sell side activity came. It was scratching towards negative 5,000, but look at today's session, getting up to positive 5,000 around 1 o'clock and then staying there into the close. What that would tell me is that throughout the sort of afternoon session, as we can see this consolidation here in hindsight, the market was continuing to see a bid across all of the names. It's not like we got to some destination and then there was an aggressive pullback market wide and just a couple of heavy weighted stocks were able to keep the market afloat. No, the fact that this holds sideways here into the close would once again speak to the breadth of the market in that afternoon consolidation and pullback. So that does strike me as being more healthy as opposed to a concern for markets. Let's take a look at the market profile over here on the Tradeovate platform, and you can clearly see that we do have a double distribution on today's session. I would also point out that this, of course, is a poor low back-to-back TPOs. So if we do find ourselves trading back down at the lows of today's session, just treat that as a weak area. It should break in theory when and if tested, but that, that may sound bearish, right? But look at where the point of control went on today's session. Certainly closed towards the highs of today's range as well as in the upper distribution. Value area on today's range as an individual sort of session was also in the upper portion of the range. It was not stuck. There's no discrepancy, I guess, is what I'm getting at, with value that was stuck lower in this distribution, even if we closed up here. So from a volume commitment perspective, I do like what I'm seeing on the profile. Of course, what we do want to carry forward is the string of single prints here as that G period was breaking out. I believe, if I was reading the news feed properly, that is when the comments came from President Biden about potentially resolving the debt crisis before leaving the G7 or whatever summit they're at right now. And obviously the market really kind of liked that information. So carry forward these single prints, the numbers for them, at least out of the ES futures. Let me zoom in so I can give you the most accurate numbers here. And of course, we'll cover these on the live stream tomorrow morning. We'll be back at it basically with a good connection here at the home setup. So 4164 is going to be the beginnings of single prints. And remember that we just treat this as a gap. Look at the very thin volume as the market rotates through that area. So we just talked about 4164 as the beginning, and the closure of those singles is down at 4149.50. Carry those levels forward. One thing I am interested in seeing is if we just go back on over to the platform here, and we'll go back on over to our SPY chart. Let's go to a 30-minute time frame chart. If you don't have the market profile, you can still spot single prints. It's just wherever there are 30-minute bars that are not overlapping. And this is kind of exactly what I wanted to see. This is basically representative of the single prints on the market profile. And notice that even if we rotate through the single prints, there's still an opportunity. Basically, those single prints close at 413 on our SPY, which does strike me as structurally significant, right? So that breakout really started over the top of balance. And if we pull back, fill those single prints and repair the structure, we could remain constructive on a higher low on the daily time frame over 413. Once again, just reinforcing that kind of idea that 413 will be a significant pullback level into the remainder of the week. Let's take a look at the performance of our weekly sectors here. So this is the weekly performance column right here. And what you'll notice is that the XLK is leading the pack, followed by financials, discretionary communications. So from a risk posture perspective, I'm actually really thrilled to see that the move has been led by the risk on sectors, really not being led at all by the risk off sectors, which would be utilities, consumer staples, energy is in there as well. Materials is lightweight. XLV is second heaviest weight, but as we know, defensive in nature. So I'm really liking the posture just based on weekly performance. Let's briefly breeze through some of these structural charts and just evaluate what's going on the daily time frame chart. So XLK, heaviest weighted component of the S&P, strong break up and over an inverted hammer high on today's session, following through in the upward direction here on a move over the top of this balance range right here, Really, really positive stuff. That does strike me as healthy and constructive for the SPY as a whole. And we do know that overhead, there's still some room to run into 155.80 as a target. The gap closes there. That's what yellow lines always represent on my charts. Gap close there is up at 157.58 on the XLK. Not calling for it into the remainder of the week, just pointing out that there is still some more room in the upward direction before we run into solid resistance, right? And even if we pull back, you can still get that constructive look on any higher lows that remain above 151.50 at this point. XLF, I mean, not the most, let's see here, not the most thrilling chart. I would say that the one positive here is clearly the close back up and over the descending 50 SMA. We haven't been able to do that since the banking crisis back here. First daily close over the 50 SMA, over a number of prior highs in here, as well as the first bounce high. That's really why we've been tracking 32.25. First dead cat bounce high from the banking crisis acted as resistance here for a pullback, and then support there for that rally as the JP Morgan earnings really sent this thing in the upward direction. So we've been tracking that level, right? And this recapture here, as well as the 50 SMA, does strike me as constructive, but we're not out of the woods, right? It's a good first step, but for financials to really be more helpful for this market, obviously you need to see either more recapture of overhead resistance or just higher low pullbacks that are really definitive and firm above this level now at 32.25. So watching that closely into the remainder of the week. Here's the XLY, consumer discretionary. I'm not going to lie, I did look at this one before I started up the video, and I've got to say I am impressed. I'm thrilled that we are back above this thorn in the side level at 148. Strong daily close up and over all of the red bar highs. No wick there, no nothing. So really liking this setup here. As we know, this was the one sort of laggard that was keeping the full-blown risk on look from being there in the marketplace. So as and if this can get continuation here, certainly a massive help for the bull case to be made in our market. Next up, let's take a look at communications. Another new high breaking out over that $60 level. We talked about this in the Sunday video, right? So strong move up and over 60. Now, as we know, because we've just formed a new higher high, markets and communications at least could afford to find a higher low pullback, retest 60, and then look for a move in the upward direction. Even at this point, right? If you zoom out to just pretend we're on a weekly time frame chart, right? You have lows, higher lows, all of these constructive higher lows. I mean, as long as ideally, because we have just made a new higher high, as long as the higher low is anywhere above 57.50, we're good to go out of communication. So really constructive look out of this chart with the brand new higher high. Ideally, you would like to just see straight up continuation for a day two type move and not immediately just fail back down underneath that point. But again, constructively with the higher lows in place, no big concerns about this chart just yet. Firmly in a nice uptrend here. Next up is industrials. This one really didn't do much. As we know, it's still stuck in the range here. So let's just move along. I don't want this video to be too long for us today. Utilities breaking down. And again, as a defensive asset class, it doesn't really concern me that this is breaking down as the market is breaking out. Don't get me wrong, downward pressure is still downward pressure for the market, but if any sector is going to be breaking down as we're breaking out in the SPY itself, utilities wants to be the one. So no red flags here. Ideally, we just kind of catch ourselves for support and start to go sideways. That way it's not acting as continued drag in the downward direction. Next up is real estate, stuck sideways in this range or just still kind of around that range in here. Nothing impressive has happened. I would say that the breakdown and then opportunity for a lower high under 36.75 does say something about the wealth effect and of course housing, but as of right now, not a concern yet unless we start making big new, big pivot lows. Something like, a downtrend that looks like this would be much more concerning. Not there yet in real estate, so keeping an open mind, but it's such a lightweight component of the SPY itself. Not overly concerned with that one there. Here's the XLP. Remember that it was the battle between two ranges out of the XLK and the XLP. We said that if the market was going to break in the upward direction, it needed to be led by technology, and that's exactly what's taken place so far. Strong pullback this week in the XLP. It's not falling off of a cliff, but it's certainly not leading the break in the upward direction. So from a posture perspective, this does look good to me. Let's take a look at the XLV, second heaviest weighted component by market cap. Love the fact that it found a hammer candle here and did not close extremely weak on the lows. So that's going to help out in the grand scheme of things from keeping the market from, I suppose, coming in more aggressively, right? As long as this isn't closing on the lows, as long as it's not seeing a follow-through move underneath 129.50, it's not the end of the world, right? Don't get me wrong. We want it to lag the market, but we absolutely do not want this one falling off of a cliff. If this looked like the utilities chart, let me just go back there for a second. If this, XLV looked like this with strong closes weak on the lows, that would be a big cause for concern. And again, as you can see from today's session with the hammer candle long lower wick, it's simply not the case. So it's keeping the market somewhat stable from that perspective, being the second heaviest weighted sector of them all. Next up, let's take a look at materials. What's going on here? Really lightweight sector going sideways, no big concerns, and energy as well, kind of stuck sideways in this range here. No big concerns there either. Let's take a look at the ratio grid and just see what's going on from that perspective. Just a new way, or another way, I should say, to visualize relative strength and weakness. So XLK looking fantastic, staying above that upward sloping 50 SMA. This, not too helpful. We don't want it falling off of a cliff. We saw in the structural chart that long lower wick, but on a relative basis, not really that promising here. Like the start of a base here in the XLF, but not all the way there. So this is still a minor red flag for markets. But the big one is, of course, just the higher low that was found in the XLY. And again, that break over structural 148 does strike me as being extremely constructive. So liking the look here in discretionary, we just need to keep it up and push for either a higher high here or continued consolidation and then a break out of this ratio. Don't want to see this turn into a double top back down underneath the neckline. That would be a big red flag for the market. Big red flag. Hey, faked break, right? So watch your XLY ratio there. XLC continues to look great. Once again, closely tied to the XLK from a posture perspective, not from a weighting perspective. If we look at the XLP for our staples, right? This is coming in. That is what we want to see. Utilities falling off of a cliff. That is what we want to see on a relative basis to the SPY to have more of a risk-on posture. Energy is sort of lagging here, as is the XLRE for real estate. If we take a look at let's go to the XLY over XLP. So we've got growth versus value, and as I'm sure you could put two and two together from the previous screen, right? This is clearly rotating in the upward direction. Certainly helpful from a risk-on posture perspective out there in the market. I really love the fact that we recaptured the 50 SMA descending on a brand new higher high as well. It's not like we just chopped through it. It's not like this kind of in here. This is a firm move up and over that 50 SMA, so certainly helpful to build the bull case. But it's not all rainbows and butterflies. If we start thinking about a couple of other data points, right? The dollar, this was something that we noted on the Sunday update. This had a odd Friday last week, and it's still remaining over the 102 level. This does not really sit too comfortably with a market that's trying to make a big breakout. Ideally, this would have been sideways, if not lower, into this week, and it's just simply not the case. So this can also stay on the red flag side of our market analysis, maybe a little bit skeptical about too much continuation out of the overall balance range on the SPY daily time frame chart. If we take a look at rates as well, let's see what's going on with rates for the day and even the week, right? So certainly elevated here. And, as I'm thinking about this, as we're going through the analysis, it's kind of a bit of a head scratcher. I have to be impressed, to be honest with you, with the XLK follow through in the upward direction as rates were actually ticking higher, right? Don't get me wrong. They're still stuck in this sideways range right here. But in theory, if rates are moving higher, typically that's putting downward pressure on the tech sector. And it just simply wasn't the case on today's session. So liking the strength out of the XLK, just want to make sure that it does see that follow through, that sort of day two follow through we're talking about on the communications chart, right? All of that would be helpful considering the small divergence discrepancy, so to speak, in the TNX that we're looking at right now. Let's move on over to this tab here, and this is going to be the Fed tracker tool. And I just want to make some brief comments, a couple of observations that the higher for longer is certainly staying in place with this new probabilities tab showing the first cut once again coming in November. That does strike me as being healthy. Now, you might think like higher for longer, that's going to hurt the tech market for longer, right? And that's the risk on sector. Well, you're technically right. But remember also that artificially cutting rates sooner just because we kind of quote unquote have to because something's broken, that's going to lead to a hard landing. The more naturally we can let inflation run its course, we can let the Fed's policy lags run through the system and ultimately see those sticky inflation reads come down, the more naturally that can happen. And we can just be patient on the cuts side of things in the market. That to me is much more indicative of the soft landing, which should provide less turmoil, so to speak, for the markets themselves. The economy and the market is certainly not one and the same, but the soft landing narrative would help sort of keep stocks moving in the upward direction as opposed to, hey, something's breaking, it's all out panic, right? Let's move on over to the compare tab as well. yeah, I would have to imagine, right, as that higher for longer is also taking place, don't get me wrong, the probabilities still strongly favor a hold at, a pause basically in the next meeting. But just notice that those odds have come down slightly. These odds of another hike have come up slightly. Again, not trying to insinuate that we should be getting another hike or, we are going to get another hike, but it does speak to the fact that the market is kind of pricing in. The Fed's going to do what they have to do. They're going to try to kill inflation, and they're not breaking things yet. The banking crisis seems, keyword, to be an isolated incident, and there's no wider spread issues so far that we have been able to see. Again, a black swan is called a black swan for a reason, because nobody can see it, right? So the soft landing narrative is basically what I'm getting at with our Fed tracker tool on today's session, and it was worth checking in, and it is worth checking in on all of these data points as we saw that follow-through move out of the market on today's session, right? I want to know what the underpinnings of the market are doing as we're actually starting to get that initiative move out of the daily balance. So here's the TLT to check in on the flight to safety trade, and what you'll notice is that it's just completely non-existent, continuing to move this ratio in the downward direction. No outperformance on today's session whatsoever. I believe it's even a new lower low. Is that a new lower low? It is a new lower low on today's session. So no flight to safety trade speaks well to risk appetite being strong in the market. Let's see what the HYG has to tell us, though. This one's been divergent for a while. Oof. Okay, so HYG. All right, take all the wind out of my sails. This isn't a strong negative divergence, okay? This goes without saying. On a session like today, where the market broke out firmly from a balance range, don't get me wrong, it did happen on that news, but this should have at least made a move to the top of the original range and even attempted to potentially get over that. Simply not the case. This is perhaps a very large red flag. It's not an end-all, be-all. You're not going to want to short the market just because of this indication here, but it is bringing in some of the optimism that perhaps you were hearing in my voice just moments ago as we were looking through the sectors and sort of seeing that confirmation from a risk posture perspective. This HYG, from an appetite perspective, right, bonds are telling us not quite ready yet. So once again, what does this mean for, let's just go back over here to the SPY daily. Seeing that on the HYG tells me perhaps that, although there may be a little bit of gas left in the tank to achieve the top of the range here, I don't know that I would be looking for new money longs on the way out of this for anything other than just a very quick intraday scalp, right? We want to be very skeptical at the top of this overall box when the HYG is positioned like what we're seeing on the screen right now. Let's check in on the breadth indications just to see what's going on there and whether or not these are also red flags. So new highs versus lows at the zero line, kind of a nothing burger there. Let's take a look at SPX A200R. This is, it's been underneath the 50% mark. It's been kind of unchanged around this area. Nothing substantial there. Let's take a look at the SPX A50R. This is interesting. This is something that I was starting to track over the weekend. And I want to bring this to let's just bring this to your attention now, right? So the issue here is, from a breadth perspective, we know breadth is terrible, and this is just one of those issues. Notice that, where we're at in the SPX A50R is nowhere near where we should be in theory if this is going to be a broad-based market recovery, right? Counting all the stocks in the SPY, you would think that if we're exceeding these highs, there have been more recaptures of the 50 SMA, and it's not even close. It's not even close. And remember that this is a daily time frame chart. The 200R, as well as new highs versus lows, we look at on a weekly. This is a daily chart. So you can pair up these highs, right? This is basically this. And if we're about to exceed that high, you would certainly want to see the underpinnings of the market also performing, and that's just simply not the case. So market breadth, HYG, junk bonds, right, sort of telling us to, although, things look optimistic from a sector perspective, not all the way there yet. We are not all the way there yet. There's just no other way to put it. I don't want to, the analysis should always be balanced based on the data points in front of us, and that's kind of what these risk appetite and intermarket dynamics are telling us as we get deeper through the analysis. Here's the RSP. Equal lows produced, certainly nowhere near those equal highs, right? This continues to be a bad breadth indication. And then I guess we'll also just take a look at the Dow. Nothing crazy here. I suppose that this is going to be, almost the equivalent. Remember that we had this fake break instance in here. There's the banking crisis as things synced back up, but it's not quite there, right? You want to watch for these things to just break at the same time. Does this pivot high break the same time as this pivot high breaks? We're, again, just not there into the remainder of the week. So this is kind of a moot point out of the Dow transports. Let's take a look now. Let's move along to volatility. Where's volatility? There it is. So volatility, The VIX itself looks kind of compressed in here. Nothing, no red flags, nothing major out of the VIX itself. If we look at the VVIX, anything interesting here? So this is, I mean, it's not, again, none of these things are end-all be-all indications. You're always going to, when you're rank ordering analysis, right, price action itself in the instrument you're trading is always going to be paramount. It's always going to be number one. If the SPY is breaking out, you might be more cautious of a breakout, but you're not going to short the market just because the intermarket dynamics are telling you that you should be slightly skeptical, right? You might want to be more reserved, you might want to be more cautious, but it certainly wouldn't say fight price action, right? So take these sort of supporting data points with I don't want to say grain of salt because they are weighted, of course, but this small uptrend that's happening in here wouldn't strike me as being the best indication as the market is going sideways. Ideally, this would have cooled off, and don't get me wrong, it did have a down day on today's session, but it wants to be more firmly in here if we're about to see continuation out of this range. It's just simply not there yet. It's trying to get there, but it's not there yet, right? That is the key component. So once again, a little bit of skepticism about a big continuation move in the SPY. I think it's still warranted at this time, even though the sectors are indicating risk on posture. Here's the VVIX, the VIX futures rather, still in a strong contango, nowhere near the zero line, even the short-dated VIX, so 9 versus 30-day VIX over here, underneath the zero line, strong contango. The one-day VIX is starting to bring up some interesting things to at least think about, like how high does it get on any individual day's session? Once again, we don't have enough data here yet to have a full comprehensive look at what the data is telling us, but it's not out of line with what we've been seeing as we've just been balancing. I'd be more interested to see what the one-day VIX does on a big flush day. We just haven't had that type of day yet. Let's wrap up the broad market now with our QQQ and see what's going on from this perspective. So the Qs are obviously going to be very similar to the XLK. Strong breakout on today's session. One interesting note here is that it's already at the upper edge of the weekly expected move. So would I be an advocate for new money longs up here? Probably not. It gets a little bit chasey at this point. Big breakout day on today's session. It's already been up and over that 326.25, which, as we know, represented previous resistance from way back over here. The QQQ as well has already broken out of this range. It's broken this top from in here. So we've already seen a bit of a follow-through move. We've already gotten the higher high. Is it reasonable that we can look for a higher low out of the QQQ? The answer to me would be absolutely. If we go to something like the hourly time frame chart here, and just have a look. I mean, in a picture perfect world, and I don't know if the market wants to be picture perfect into the remainder of the week, but if it does pull back, the first level I would be looking at is the breakout point, into this afternoon here, which is 328.50. That would be number one. Can we find a higher low there and rotate in the upward direction? Just looking for an equal high test, at least into the remainder of this week. If we go further than that, if you note that we get here and then the market's putting in bear flag and starts to slip underneath 328.50, perhaps on like a 5-minute chart, you're watching for sets of lower highs underneath, you can trade it in the downward direction towards that 326.25 we were just talking about on the daily time frame. Anything really further than that starts to jeopardize things on the hourly, but really not on the daily, I would say. Remember that this double top breakout, we can certainly afford, now that we found this higher high, a pullback that does this on the daily. It doesn't really feel too far-fetched at this point in time, especially if we know the SPY potentially could get rejected at the top of its overall balance. Let's take a look at the Nasdaq internals just to see if there's any divergence between the NQ internals and price action itself. Okay, so this is actually interesting, right? So what I would say here is there's a strong outperformance in tech on today's session from a volume perspective, inflows perspective, well above that 400 million mark, whereas yesterday, when we saw that the ES internals were fairly weak, notice that the Nasdaq didn't, not even close to negative 400 million. So once again, a positive feather in the cap for the bulls from a leadership perspective. Tech is leading the rally, which is kind of exactly what you want to see from a volume perspective as well. It just was not that bad on the Tuesday session. If we look at kind of our advanced decline line, once again, this is kind of a little bit stronger sell side, market breadth wise, I suppose. That's kind of the equivalent of the weakness in the market breadth we just saw on the SPY indications out of the NQ here, making the move to the zero line and then bouncing off of it, not able to get up into trend zone on today's session, whereas the SPY and the ES internals, obviously it was a more mild pullback, and then something like this into the close. The ticks, though, once again, speak for themselves. Look at how strong this was into the close, well above 5,000, whereas the sell side only reaches negative 5,000 into the end of day yesterday. And if we just zoom in on price action here, it was kind of a strong sell into the close, but in the grand scheme of things, nowhere near the opening print in the NQ on the Tuesday session, whereas the ES obviously was making new lows into that close. So it does make sense that the Nasdaq remains a bit stronger here. The underpinnings of the Nasdaq and the tech marketplace do look a little bit stronger at this point in time. If we just go on over and take a look at the market profile, what can we see from the market profile? So once again, a double distribution with the point of control in the upper portion, the upper distribution. If I zoom in and give you the numbers here, I'll give you the QQQ equivalents as well in just a moment. Right, so the NQ is going to be 13,604. 13,604 starts your singles, and those singles are going to close at 13,563. 13,563. So be mindful of that area as a potential, treat it like a gap, basically thin structure in there. Right, the market should rotate through that fairly quickly instead of getting caught up and hung up in there for something that does this. And you can take it as an indication if it does. Right, so this goes for the ES as well. This is sort of theory. Right, this is market and trading theory here. If you notice that on tomorrow's session, we start pulling back and we break into the single prints, but we do something like this and we really struggle to rotate through them and we pop back above, what does that tell you, right? That tells you that the sellers are unable to do their job and unable to backfill the thin structure. Buyers are probably, in an overwhelming amount of control, and the market should rotate back in the upward direction. So just carry that forward for both the ES and the NQ. We'll go back on over here, and I'll give you the equivalent on the QQQ 30-minute chart. Let's go back to a 30 here so I can spot those single prints. And would you look at that? It's not going to be exact. It's not at 328.50, but you can see that the singles would have started right over that breakout point. That's where there's a lack of overlap in these 30-minute bars. That level is technically going to be at 329.13, and I will go over these levels once again in tomorrow's pre-market live stream. Okay, pre-market live, we will talk about the singles. That is for sure in the ES and the NQ. So 329.13 would be like the picture-perfect ideal pullback. Not technically getting all the way here, but closing the single prints and then rotating away from it would be the more bullish indication. So carry that forward. Once again, 329.13. Let's take a look at, let's go over to the IWM, and then we'll just take a quick tour through the core list of companies, and we'll send you on your way for the night. Zooming into the IWM, not as impressive of a breakout on today's session. Don't get me wrong, a solid move in the upward direction, and we did technically close over that 175.75. But, was it that firm? Did the breakout get to like here, which is basically what happened on an equivalent basis in something like the ES and the SPY? Not really. So we are coming into the upper edge of the weekly expected move. We're kind of testing this area here. It would be, in my estimation, catastrophic specific to small caps if we saw them rotate back underneath 175.75 and then produce a lower high back in this range, because technically we would have a look above and fail, right? Look above, tried to get above the top of the range, failed to do so, rotate to the bottom, 172.85 would become the target. Catastrophic for the IWM because, again, lack of progress, and we already know that from this perspective, we've seen progress in the downward direction from the sellers. I wouldn't call it catastrophic for the broad market as a whole. It certainly wouldn't be helpful, though, for the SPY if that were to be the case in the IWM. So going forward into the remainder of the week, a very close watch will just be what's the interaction at 175.75. If we take a look at the hourly time frame chart, what else can we learn here? So a strong rally, zero pullbacks until the afternoon session. And you can even see here that the pullback into the afternoon session did start to technically find a higher low above that 175.75. So constructive into the close. It's just a matter of, does that hold into the remainder of the week? That is a key question here out of the IWM. Not much to discuss other than that in the IWM. I would say, just like what was at the XLF, this is the first time we've closed back above the 50 SMA since the banking crisis, right? So that's a similar observation. But we still know, right, in the ES and the NQ, basically the SPY and the QQQ, if we throw on the anchored VWAPs, right, we're above all of them we'll just look at these charts in a second, but notice that there's still strong potential for resistance here at 179, keeping us in the overall range on the IWM, right? So this anchored VWAP cluster is still a big cause for concern. This small cap market is not there yet from a risk on posture perspective. This is basically a proxy, right? So still some concerns here. You can sort of weigh the data points and say that we might just want to be cautiously bullish into the remainder of the week here, looking for perhaps the pullback in the SPY to 413. But here's the QQQ, once again, the fan of anchored VWAPs well above that in the QQQ, and here's the SPY. well above the anchored VWAPs in here, pushing away from that. It's been the case for quite some time, which is why it's not been in the videos as regularly recently, but certainly in the IWM, still a cause for concern, clustered overhead at that 179. So that's the broad market. Let's start running through our core list of companies to wrap up today's video. No extra trade ideas. Whenever I'm gone from the market for a day, I always feel like I need to just, sit back, watch how the next open goes, and sort of get back in the groove of things, which is why we're doing the full rundown kind of as I'm doing it literally in the afternoon for today's session. Nothing scripted, nothing, this is the real deal. This is the afternoon routine. So Apple, what's going on here? Certainly an attempt to break down from this balance. Notice the lower wick on the daily session, right? Notice the lower wick on today's session, testing the top of this gap, certainly, and no follow through underneath, and even into the close of business. Notice the higher low back above 172. So to me, it starts to feel like a look below and fail on Apple. Now, we had this level mapped out here at 172.65 and unable to really break it into the close. I'm going to carry that forward as perhaps the key level in Apple for tomorrow's session, as long as we're opening within striking distance. If Apple can open here and then break above that 172.65, look left, this breakdown really offered thin structure through here. The top of the range, 174, should be the rotation target. So watching that in Apple and bears, you'll get something going on with a lower high underneath 172. Let's take a look at Netflix and see what's going on over here. Netflix strong. Look at that bar. Little inside doji on the Tuesday session. We sort of knew that nothing happened there. Yesterday's session was brutal, just sideways and only getting interesting into the close. But on today's session, again, really bummed that I kind of missed this, but beautiful bullish engulfer, lack of follow through underneath the low of that bar. Let's take a look at the hourly chart, see what else we can learn about this. I mean, look at the reaction here, right? So from the lower wick, you can infer that it was lower first and then higher into the close of that first hourly session. But the first hourly session goes right to the top of the Tuesday range. So right off the bat, extreme strength out of Netflix here. So loving what I'm seeing. Is it worth chasing for a day two follow-through move? Perhaps, right? This is fresh off of a pullback, day one bullish engulfer, looking for just a rotation back to the equal high here. 348.50 looks interesting into the remainder of this week out of Netflix, looking to see if that momentum can continue here in this particular name. That'll be a top watch for tomorrow, noting the structure of the daily bar there. Here's Tesla. What's going on with Tesla? Again, nice break of the two-day balance here. Let's take a look at the hourly chart. So these highs are obviously going to want to offer, the line in the sand pullback at 168.85, or just straight up continuation over these highs at 174.40. We're kind of chopping around in this as a range. So once again, if it's going to go and double that range, it brings us into this previous range, and the target would be closer to, let's see, on a double, brings us to 181.50s. Roughly. So you'll still have to contend with, don't get me wrong, daily 50 SMA as well as this level here at 177.65, but Tesla upside over that 174.40 does look interesting. Look at the hourly chart, right? Great consolidation here into a flag into the afternoon session, high and tight consolidation. Something like that does get interesting for the upside. Once again, on a pullback, I'm not sure that I would want to short it here. Maybe if you're feeling risky, you could look to do something underneath 172.64. That would kind of be your entry point to start getting through the thin structure on the pullback, but then seriously reevaluating at 168.85, right? So that's Tesla. Let's take a look at Google. What's going on with Google? This is going to be one of those squeeze candidates, right? I talked about this in the Sunday video, and you might be calling me crazy for saying things like this, but I still can't really recommend that this is a buy up here on the squeeze, at least as a day trade. Chasing this long up here, to me, the risk reward just isn't really there. If you're into that type of thing, if you're into chasing the squeezes, that's fine, but I'd much rather wait for some sort of pullback or to play off of structure. So chasing this into resistance, not really the trade for me. So not looking for longs here in Google unless there's just a no-brainer setup on something like a 5-minute time frame chart, or there's a scalp available that's, again, a no-brainer. Perhaps looking at it from that perspective, but what's the next big resistance? See, it's tough to say because, there is some room to run technically back to this breakdown point at 126.25. Plenty of room to run if you can clear the 122.15 in the first place. After a gap and go, after sort of being in the headlines a couple of days, is it due for some consolidation? Again, that's my fear out of names like this and the reason why I don't chase them, but I wouldn't try to short this, right? You don't try to fight that strength. You just avoid going long to avoid the risk of getting caught up in a pullback. If you are going to trade it, I would say that the ideal pullback, 119.15, and then just the equal high is back on the table. The concern would be, obviously, you can get a pretty picture-perfect head and shoulders out of this if it doesn't really rebound up to the equal high into the remainder of the week. So just keep your wits about you in Google. A tough one to chase, but those are the numbers. 122.15, 119.15 as the picture-perfect pullback, and then the line in the sand pullback would just be the top of this range here from the most recent breakout, 117.50. Anything under that, I think the risk is that Google is going to come down and close the gap down towards 113. Next up is going to be Meta. What's going on with Meta? If we take a look at the daily time frame chart, let's see what's going on here. Nice recapture this week of the top of this range, right? But what's going on so far? I guess the hourly is going to have to do. Yeah, nice. I mean, again, pretty disappointing day to miss with travel, but look at this as a nice constructive hold into the close of 241. I'd be watching this for tomorrow's session, right? Any consolidation that stays above and the broad market itself is staying strong tomorrow, if that's the case, then Meta is going to be a continuation play up and over these highs for that rotation. We know that there's some room to run here into 247.75, right? So that's definitely on watch here for Meta, right? So any consolidation, any bullish holds of this 241 into tomorrow's morning session with a strong broad market, be looking for rotations higher out of that one. Obviously, failing back down underneath, wouldn't really look to short it. You're dealing with too much of a pie in the sky, inverted head and shoulders. It would really have to fail 236.75 before getting interesting in the downward direction. Next up is NVIDIA. What's going on with NVDA? Back to a daily chart. That looked interesting on the hourly, but what's going on here? Earnings a little bit further out on this one. Still not this week, next week. But as we get into it, certainly a pre-earnings run-up on the table. I mean, breaking out of this, yesterday's pullback into the afternoon like this, as again, NVIDIA was one of those names that was propping up the broad market on the Tuesday session as the market was just sideways. So seeing day two follow through here, I'm not sure. Again, I wouldn't be an advocate for a long in NVIDIA now that it's already seen day one, day two, and coming into resistance at 307. I think the move has been had. There's either going to be a slow drift into that 307 or a pullback to test the 289, and then a reversal off of that would be the more ideal entry for longs there. So that's kind of the game plan in NVIDIA. Let it be until it comes into structure there. Here's Softy, which this was a concern for distribution up here at the highs with the lack of follow through. It does look like it's grinding in the upward direction. There's just not enough. There's not enough room before this next resistance to really see a solid trade unfold in there. So I'd want to see either consolidation and then just a break of the 315.25. Then things kind of open up for about 5 points up towards 320.75. But I don't know that that's available into the end of the week unless there's a big, Chat GPT or OpenAI or some AI headline that potentially acts as a catalyst. So a little bit cautious of Microsoft, just noting the interactions up here at the highs. Not thrilled with that one. I think we have better setups elsewhere that we've already discussed, namely Meta would be one of them. Even Tesla, Apple looks good, right? All those names kind of look better than that. So here's Amazon, last but not least, the mini beast, and then we're out of here. It's been a long video today with the full recap. This is just the routine. So here we go. Amazon, what do we see? Nice little break of consolidation on the Tuesday session. Again, one of those names that was propping the market up and consolidating on today's session as the market was strong. So to me, if Amazon's not going to see a strong move as the market is just ripping in the upward direction, then it's not necessarily the one to take as the market is potentially pulling back, right? So this to me is a patience play into the remainder of the week, very similar to NVIDIA that we were just looking at, right? We've already seen day one and sort of two-ish of the breakout. We're coming into 115.50 resistance. Next overhead target's 119. So there is some room overhead, but ideally this kind of like pulls back if the market's weak tomorrow or just even conservative tomorrow. If the market's kind of reserved in its movement, I wouldn't really be looking for big follow through out of Amazon, noting that it's kind of already made its move here. So 112.75 would act as an ideal picture perfect pullback, and the line in the sand would be 111.25. And again, here's the hourly time frame chart. You can see both of these levels, right? Coming into this respects your prior pivot high. That's more of like a daily level, right? And this is an intraday break that happened here. Once you get underneath that, right, you've retraced all of the breakout move from the Tuesday session. Not really ideal to be continuing to look for longs in that instance. You'd have to wait for something better on the daily chart from a structure perspective. Again, just like, what was it? I'm already blanking on what name it was, right? We were looking at it potentially come down and close the gap. Maybe it was Apple. Apple strikes me as kind of one of those only ones that has a big gap underneath left. So that's been that. That has been a rundown of kind of like how I do the afternoon routine and look at charts. Congrats to anybody who caught the breakout on today's session. Again, hopefully you were able to manage without the pre-market prep. I'm sure you were able to manage without the pre-market prep. With that said, everybody, thank you so much for tuning in. I'm looking forward to being live again tomorrow morning, hanging out with all you folks, and we'll see you then. If I don't see you, have a great rest of your trading week, and enjoy the weekend as well. Look out for the weekly watch list recap on Saturday sometime. With that said, everybody, I will see you in the next one.